Raj. Thanks for coming in.
Thank you, Harshit. Thanks for having me today. How are you?
I'm good, thank you. Raj, as a buyer's agent, we are seeing a lot of clients whom we interact with struggling with their serviceability, and it has been a trend since last some time. Are you seeing similar in mortgage broking, and how are you helping your clients with that problem?
Yeah, it's a very great question. I think it's a common problem across our industry is serviceability or borrowing capacity. A lot of clients have got existing loans and they can't borrow more. I think there are three key factors behind this. Number one is the higher interest rate. Number two is people always relying on tier one or the first tier lenders that are the major banks. And the third one is the right structure. So just to elaborate on that, interest rate has been on hold since last 7 to 10 months. Reserve Bank has not changed it. So that is also affecting the serviceability or borrowing capacity of the customers or clients. Second one is people are going to first tier lenders. So when I say first tier lenders, they are the top 10, 12 banks. Now when they assess new loans, they put a buffer of 3%. Which is common across the board, but there are other options available with second tier lenders or non-bank lenders where this servicing buffer can be 1 or 2%. So that's another option. And the third one is structures. A lot of people have bought in individual names. Obviously they need to go and see their accountant because everyone's financial situation is different. So accountant and financial planners need to step in and guide their customers to put new properties or loans in a different structure that might preserve their borrowing capacity. So I think these are the three factors that lead to what we see a problem in common serviceability and reduced borrowing capacity.
This is awesome, Rajat. So technically, you're saying that they need to reach out to their mortgage broker, and you guys can help them look after. There are options available based on their financial situation. You will be able to assist. As you mentioned, accountants, financial advisors, they can also come to the party and help. That's awesome. What other problems, because this is from a buyer's agent, I mentioned what I'm seeing. As a mortgage broker, what are the challenges your clients are, which you're seeing commonly?
I think a lot of people are very reluctant and they are trying to find the right time to get into the property market. There's no right or wrong time, it's when you're ready. So I was talking about the second tier lenders or third tier or non-bank lenders. So they take 1 or 2% reduced buffer for servicing purposes. However, the interest rates are slightly on the higher side. So let's say on a $500,000 loan, if you pay 1% extra, that's $5,000 a year in interest. And if you get into the property market, and in 12 months' time, you end up getting 5% growth on a $500,000 property. That means you are ahead. And by paying that $5,000 extra, your equity can be anywhere from $25,000 to $30,000 in the first year, which you have gained by going into the market right now. Second is there's a lot of mortgage brokers in the market. A lot of people want to see their credibility and experience. So best is to go see their Google reviews, their websites, what information they have got. That will give you a good idea about how long they've been operating and what sort of experience they carry with them when you talk to them. And always speak to a couple of them. If you're not happy with one of them, always reach out to a second one and get a second opinion. Now, everyone wants to understand your situation first. Like in our case, we always put customer first. So no matter what happens, we have to work in your best interest. And that's what all the mortgage brokers do. Some in our industry, they deal with few banks which they are comfortable with, and they keep on going to the same bank. And I think most of the brokers have got more than 20 lenders or 30 lenders on their panel. I think all the aspects of the inquiry should be explored before giving recommendations to their clients. Second one, and the most important one, is responsiveness. So sometimes broker ask a lot of documents which we have to collect because of the compliance purposes and lender requirements. And then there's no response with the customer, what's happening, what stage we are in, and what's the process look like. So I think you have to be upfront with clients, outlining the process, how the broker works, what are the different stages while having that conversation or during the application, and keep them updated. And the third one, and the most important one, is be genuine. people will figure out if you're not talking or you're not understanding their needs and not getting advice with the best interest in mind. So these are the three major things. I think number one is credibility, number two is responsiveness, and number three is looking after clients and their best interest. These are the major key factors a client looks into before deciding to go to a mortgage broker to continue their property journey.
And I resonate well with you on this because I think every client needs an A team on their side while building wealth in the wealth journey. And I call A team is your accountant or a financial advisor, a great mortgage broker, and a buyer's agent if you are engaging a professional or for buying property in the new markets or for your strategy and portfolio building. So these A team helps you first manage your debt, second your tax structure, and third buying the right property in the right market to build that passive income through property investment. So property, as we understand that, yes, you just need to buy a property, but anybody can buy a property, but not everybody can build a portfolio. And that's where the game changes. So, and you're right, this is a very big problem right now. People have just gone ahead and they're stuck. They don't have serviceability. They can't move forward. And that's where we are seeing there's a lot of inclination towards commercial property as well, because people are stuck with their out-of-pocket expenses. So one way is we are seeing a lot of clients who are interested in commercial property. So Raj, do you see that as one of diversifying their investment in multiple type of assets helps?
Look, just making a portfolio based on residential properties is not hard. A lot of people can do it themselves. If they're buying interest rate, obviously they need local expertise in a buyer's agent to help them out. But I've seen recently a lot of inquiries coming for commercial properties and under self-managed super funds. Obviously, this can't be done without a proper advice from an accountant or financial planner. So we have seen a lot of increase in inquiries for commercial properties because the rental yield is better than residential, and there are no outgoings which needs to be paid from your pocket, or the tenant pays all of them. And the third thing is, it can be a positive cash flow. So after paying all the interest and other expenses, you can still have a positive cash flow left in your pocket that might help you to run this portfolio and put this cash flow into other negatively graded properties if you want to.
Brilliant. And that's where what we see is if you want to be in the top 1% investor segment, this has to be balanced. Why?
Yeah, I think mortgage brokers, we're not advisors. We only act on what your accountant and financial advisors tell you based on your financial situation. But what we do is we come up with different lenders, different options, provide you options where you can have a better loan structure as compared to just going to a normal bank and dealing with them directly. We provide you a lot of options if you deal with a mortgage broker. So I think there's a big market around where first-tier lenders, second-tier lenders, third-tier lenders, and even non-bank lenders are there. Recently, I've seen a lot of increase in self-managed super fund inquiries. People are buying residential or commercial properties. Now, obviously, first-tier lenders don't do it. So you have to go to second or third or a non-bank lender to get these self-managed super fund loans approved. And there are major players in there, even though they are expensive, but a lot of people are getting advice and setting it up and buying properties, commercial or residential, to build their portfolio.
And I think, Raj, you're right. I'm seeing a lot of curiosity because in SMSF, and definitely, as you mentioned, accountants and the financial advisors, based on their risk assessment and everything, when it comes to property, we go and buy either commercial or residential in SMSF. And we are seeing a lot of business owners buying a commercial property and then renting it to themselves, because that option is also available. Are you seeing that as well in business segment or in the commercial segment?
Yes, obviously, with the right advice, SMSF can buy a commercial property and rent it out to your business if you want to. But obviously, there's a lot of advice and other things you need to do before you make that or take that step. But we have seen a lot of increase in inquiries via self-managed super fund at the moment. Some of the inquiries also are not with SMSF, just the commercial ones. There are obviously pros and cons. Commercial can give you a good net rental yield at the end, no outgoings, everything paid by the tenant. If you got a long-term lease or a long-term tenant in place, bank can give you 70% loan just based on the lease. But on the flip side, obviously, rental properties, if tenant breaks the lease, it can be really hard to rent it out. So obviously, residential or commercial, there are pros and cons, which everyone needs to analyze based on their individual financial circumstances before taking that step.
I agree, because the risk appetite is critical. And as a buyer's agent, when we do strategy with our clients, we do understand that. And then we send them to the financial advisor or an accountant to understand that what is right structure, whether it's buying under SMSF, as well as whether it's a trust outside SMSF and all that, as you mentioned in your conversation, always about the structure, whether it's a mortgage or a tax for tax purposes. That's very critical. So Raj, what are the key messages? What one should not do in the current real estate market? Being a mortgage broker, what could be just few things that you would like to share?
Look, it's a very $1 trillion question, what we should do, what we should not. Look, everyone's individual circumstances are different. So they need to analyze. They need a good team of accountant, financial planner, and a mortgage broker next to them. And they should know each other. And the other one is, if you are looking to invest in commercial and you don't have any experience, then engage a buyer's agent if you wish to. I think educating yourself, there's a lot of information available online with webinars and other platforms are there. A lot of information is available. Educate yourself. See where you sit. Don't wait to property market to come down or interest rates to come down, because if you jump into now and pay a couple of % extra, that might be really useful in 12 months if the property has grown by more than 10%. So you have to weigh up the cost versus benefit. Obviously, engaging professionals is the second thing. A lot of people think we can do it on our own, which is, there's nothing wrong with that. But there are certain professionals that specialize in. So I can't do my accounting myself. I need an accountant. I can't get my loan myself. I need a mortgage broker. I need a lender to go to get my loan down. Similarly, a lot of buyer's agents are there where you can get help from. So I think help is there. It's just how keen you are to get your goals achieved in a professional way as compared to what is your risk appetite and how much you want to do in next 5 to 10 years. I think there should be a strategy and a plan in place which should be executed with the help of these professionals around you.
That was quite interesting, Raj, and thanks for coming.
So yeah, no, thanks for having me.